Hey guys, it's Steven here. In this video, I will rank all the Charles Schwab Index Funds on a tier list that includes domestic equity index funds ranging from small cap to large cap, international index funds, and fixed income funds. Over the past month, I have researched and analyzed each index fund for their historical performance, portfolio holdings, risk profile, expense ratio, and most importantly, potential for future returns. Many of these funds are part of my own index fund portfolio that I use to achieve financial independence. This tier list is my personal opinion. Feel free to leave comments down below where you think a certain Schwab index fund belongs on the tier list. The tier list can be a great guide for long-term investors interested in Charles Schwab index funds. Before we get started, one important distinction for this Charles Schwab index fund tier list to keep in mind is that this tier list is for long-term investors. Investors with at least a 10-year time horizon or looking to buy and hold for life for long-term wealth. What is the index fund tier list? As we go through the index funds today, the S-tier funds are the best of the best. These are the greater standalone funds that will produce excellent results for long-term investors. If you were starting an index fund portfolio, these are the funds that you would choose first. A-tier funds are very similar to S-tier funds, but they may be lacking one component or another when compared with S-tier funds. It could be higher volatility with the funds you select, or you might be less diversified depending on what you choose. However, if you're making an index fund portfolio or choosing multiple funds, then A-tier funds are definitely worth considering. B-tier funds are not going to produce as great of a long-term performance as S or A-tier funds, but they can be utilized in specific circumstances. Whether you're looking for something in particular, if it's less volatility, or just want to have safer returns, potentially then you can consider some of the B-tier funds. C-tier funds produce notably, significantly less returns than any of the other funds in a higher tier. Funds here are for people who are willing to potentially take a little bit of a chance on things such as expecting greater future performance, funds that have had weaker performance, at least when compared to the funds above, or reduce volatility as you get closer to your target retirement age. D-tier funds are funds that are not worth considering if you're picking your first few funds for your index fund portfolio. There are much better choices than these, as this tier severely underperforms when it comes to producing long-term results. Funds in the C tier possess some of the qualities of D-tier funds while producing better returns. Let's jump right into it. First, we have a few of the popular large cap index funds, which will be some of our top ranked index funds on the tier list. We'll start with an index fund that is unique to Charles Schwab, the Schwab 1000 Index. FNXFX with an expense ratio of 0.05% and no investment minimum provides investors with a broad, objective measurement for the value of companies driving the US economy. In 1991, Charles Schwab launched the Schwab 1000 Index in a bid to capture as accurately and consistently as possible the long-term growth of America's large and mid-cap companies. The Schwab 1000 Index provides exposure not just to the largest companies of today, but also to many promising companies of tomorrow, the mid-cap opportunity. The mid-sized companies in the Schwab 1000 might well include a rising technology company, a fast-growing consumer product maker, or a rapidly expanding retailer. In essence, the broader exposure can potentially capture growth earlier before these entities mature into the leading corporations of tomorrow. Past performance is no guarantee of future results, but over the past 5, the Schwab 1000 Index has returned 14.15% versus 13.99% for the S&P 500 Index. Over the past 15 years, the Schwab 1000 Index has returned 9.79% versus 9.61% for the S&P 500. In past 25 years, Schwab 1000 Index has returned 9.69% versus 9.48%. The performance for the Schwab 1000 Index has been by the slimmest of slim margins, higher than the S&P 500 Index. So if you're looking to understand the growth of the US economy through the lens of America's top companies as they evolve over time, you can consider adding the Schwab 1000 Index to your portfolio. This unique fund, the Schwab 1000 Index FNXFX, is our first fund that belongs into the S tier. Next, we have the Charles Schwab S&P 500 Index Fund, SWPPX, with an expense ratio of just 0.02%. The investment seeks to track the total return of the S&P 500 index. An index fund that tracks the S&P 500 is an absolute staple in any index fund portfolio. When we look at the returns since its inception in 1997, it's generated over 8% returns per year and over 14% in the past 5 years. While past performance does not guarantee future results, historic return is above average, which is fantastic. Historic risk is average because you're investing in big name companies. So there will be fluctuation year to year, but it is an upward trend over time. Investment style is categorized as large cap blend, meaning there are both value and growth stocks. Top 10 holdings include Apple, Microsoft, Amazon, Facebook, Google, Berkshire Hathaway, Johnson & Johnson, Procter & Gamble, and Nvidia. All large, stable companies. You're getting exposure to all the big companies that make up about 75 to 80% of the total market. The Charles Schwab S&P 500 Index Fund SWPPX goes into the S tier. Next, we have the Schwab Total Market Index Fund SWTSX with an expense ratio of 0.03%. It seeks to provide investment results that correspond to the total return of a broad range of US stocks. Total market index funds are a staple in any index fund portfolio. You are essentially mimicking the growth and buying a piece of every company in the United States. When we look at the returns since its inception in 1999, it's generated about 7% return per year and 13.56% in the past 5 years. Historical risk and return is above average, and the investment style is categorized as large cap blend. Top 10 holdings are the same as seen in the Charles Schwab S&P 500 Index Fund, but with a lower percentage allocation in its top 10 holdings, and spread out over more companies. The Schwab Total Market Index Fund SWTSX also belongs in the S tier. Other large cap index funds include the Schwab Large Cap Growth Index Fund SWLGX and the Schwab US Large Cap Value Index Fund SWLVX. Out of these two funds, which one you prefer depends if you are more investor in growth stocks or value stocks. Growth stocks are companies which are considered to have a good chance for considerable expansion in the future, either because they have a product or a line of products that are expected to sell well, or because they appear to run better than many of their competitors and are predicted to gain an edge over them in the future. Or if as an investor you prefer value stocks, which are usually larger, more well-established companies that are trading below the price that analysts feel the stock is worth, depending upon the financial ratio or benchmark that is being compared to. Value stocks also tend to outperform during bear markets and economic recessions, while growth stocks tend to excel during bull markets or periods of economic expansion. Regardless, both are fantastic choices. I have both of them in the S tier. Next up, we have the mid-cap and small-cap index funds. The Schwab US Mid-Cap Index Fund SWMCX with an expense ratio of 0.04% and the Schwab Small Cap Index Fund SWSSX with an expense ratio of 0.04%. Overall, mid-cap funds have higher volatility than large-cap funds, and small-cap funds have the greatest volatility when compared to either mid or larger cap funds. Typically, small-cap funds have a market cap between $300 million to $2 billion, and mid-cap funds have a market cap between $2 billion to $10 billion. Both small-cap and mid-cap index funds have the potential for greater future returns than large-cap funds, but the trade-off is in the higher volatility. An investor can also choose between the growth versus value small and mid-cap funds. I place the other mid and small-cap funds into the A tier, but if you can stomach the volatility, these funds are easily also S-tier funds. However, if you were to select only one index fund, I would have these ranked below large-cap S-tier funds. If you are selecting multiple funds for your index fund portfolio, these mid-cap and small-cap index funds are S-tier funds and also make up a good portion of my personal portfolio. Next, we get to the Schwab International Index Fund SWISX with an expense ratio of 0.06%. While I have tremendous faith in the growth of US companies, many countries around the world have fantastic companies. This investment seeks to track the performance of a benchmark index that measures the total return of large, publicly traded, non-US companies from countries with developed equity markets out of the United States. When we look at the returns, since its inception in 1997, it has generated over 4% annualized return and over 5% in the past 5 years. Historical return and risk is average and is also categorized as large cap blend. Top 10 holdings include companies such as Nestle, Novartis, Toyota, AstraZeneca, and others. When we look into which regions of the world the equities are from, we see about 60% of the equities from Europe, 31% from Asia, 7% from Australia, and 1% from North America. However, for the next 25 to 30 years, I do not see international equities outperforming US companies. The US is the leader in innovation for the foreseeable future. International equities also produce less returns than domestic equities historically. So that's why I placed the Schwab International Index Fund, SWISX, into the B tier. If you think international companies will surpass American companies in technology and innovation, you can have them in a higher tier, but I don't think that will be the case for a while. Last but not least, we have the fixed income index funds. Fixed income have produced significantly less returns than equity index funds historically, and are better for investors with a shorter time horizon. Investors getting closer to their target retirement date may have a higher percentage in fixed income index funds as well. Or if you want to reduce the volatility of your overall portfolio, you can consider adding a bond index fund. But as a standalone index fund, they will be severely lagging in returns compared to equity funds. I have most of the fixed income index funds in the bottom tiers, with the lone exception of the Schwab US Aggregate Bond Index Fund, SWAG-X, with an expense ratio of 0.04% and a current distribution yield of 2.45% in Tier B, as I believe it will provide slightly higher returns than the other fixed income funds. The Schwab Treasury Inflation Protected Securities Index Fund, SWRSX, with an expense ratio of 0.05%, I place into Tier C. And the Schwab Short-Term Bond Index Fund, SWSBX, with an expense ratio of 0.06%, is the lone index fund in Tier D. Let's take a final look at the Charles Schwab Index Fund tier list. How do you think I did with the tier list? Hope you guys found this video helpful. This tier list is a great starting point for long-term investors interested in Charles Schwab Index Funds. There's such a wide selection of great index funds available. If you disagree with any of the rankings, feel a particular index fund should be ranked higher or lower, feel free to leave any comments down below. This tier list is my personal opinion after analyzing each index fund for their historical performance, portfolio holdings, risk profile, and most importantly, potential for future returns, which can be subjective. If you enjoyed this content, be sure to like the video, subscribe, and hit the notification bell for more videos delivered to you. Have a good one.